Ladies and gentlemen, welcome to Money Trees, your source for financial edutainment. So, with Dogecoin going mainstream, and everybody is now wondering what these cryptocurrencies are and how are they derived, right? We do have a brand new technology called blockchain technology, and it is disruptive innovation. Just like when the internet got invented, right? Blockchain is a computer program that records information in a way that makes it difficult or impossible to change, hack, or cheat the system. A blockchain is essentially a digital ledger of transactions that is duplicated and distributed across the entire network of computer systems on the blockchain. So you have the internet, and now you have a blockchain on top of that internet. So it's um, a secure way to send and receive information, basically, where there's proof of work. And we'll get into that proof of work in a little bit. But the first successful blockchain was Bitcoin. Satoshi Nakamoto is accredited as the brains behind blockchain technology. Very little is known about Nakamoto, as people believe he could be a person or a group of people that worked on Bitcoin on the first application of the digital ledger technology. So Nakamoto conceptualized the first blockchain in 2008, from where the technology has evolved and found its way into many applications beyond cryptocurrencies. Every single Fortune 500 company out there is looking to implement blockchain technology into their organization. So it's a huge deal. Satoshi Nakamoto released the first white paper about the technology in 2009. In the white paper, he provided details of how the technology was well equipped to enhance digital trust, given the decentralization aspect that meant nobody would ever be in control. Um, so up until now, somebody's in control of that information, right? The company owns their information, or the government owns their information, or the bank owns their information. With the blockchain, you don't need them anymore. You don't need government, you don't need the Fed, you don't need the banks, and you don't need um, payment system like Visa to send and receive money or transactions. It's decentralized, so the code itself verifies the transaction. In simple terms, blockchain is a peer-to-peer distributed ledger that is secure and used to record transactions across many computers. The ledger's contents can only be updated by adding another block linked to the previous block. It can also be envisioned as a peer-to-peer network running on top of the internet. In layman or business terms, blockchain is a platform where people are allowed to carry out transactions of all sorts without the need of a central or trusted arbitrator. So, peer to peer, me and you, nobody else. I can send, receive information without a third party. Isn't that a beautiful thing where, um, you know, there's a technology that exists on the internet where it's just you and somebody else. That's never been done before. Um, the created database that these blockchains produced is shared among network participants in a transparent manner whereby everyone can access its contents. Management of the database is done autonomously using peer-to-peer networks and a time-stamping server. So, yes, the ledger is available to everybody to see, but there's a public key and a private key. Um, and if there's more behind the scenes happening, of course, this is just the overview. But the security and proof of work, to basically when we send each other transactions through the blockchain, it goes on the internet on a blockchain all around the world. And Bitcoin prints a blockchain every 10 minutes. A block, I mean. So every time it prints a block, the last hash, which is like a fingerprint, of the last block is the first hash of the next one. So it's always linked, and those cannot be changed. Um, Proof of work is necessary for security, which prevents fraud, which enables trust. This security ensures that independent data processors, miners, can't lie about a transaction. So a miner, when you're mining Bitcoin, you're essentially just verifying transactions. And the code that's written into Bitcoin is that you need 6 independent verifications and consensus in order for that transaction to go through. And it happens in seconds or minutes, depending on how much backlog there is. This means that the miners can't lie about the transaction. So, there's millions and millions and millions of square feet of computers using computing power and energy to verify these. China being one of the biggest ones. And miners which use computing power and energy to verify each transaction are paid out in cryptocurrency. The first one being Bitcoin. So, instead of a corporation paying employees or paying or spending a lot of money on their technology, there's a code that's written on the internet that does all this for us, and all that work is compensated through cryptocurrencies. So that's the way blockchains work. Blockchains produce cryptocurrencies, and there's thousands of cryptocurrencies out there right now. We're going to talk about some of the best projects to get into. Bitcoin being the godfather, the digital gold, basically. We have the non-fungible token, which is digital collectibles, just like trading cards and valuable paintings and antiques. Non-fungible tokens allows you to have that in a digital way, where you collect these digitally. Decentralized finance, where you have blockchains out there that will loan out cryptocurrency. If you provide liquidity, you can get 12%, even 20% return per year on your crypto. All you do is you provide your cryptocurrency to the decentralized finance project, and you'll be earning passively by just parking your money. This is all going to be used in banking and finance, just like we've been seeing, where PayPal, Cash App, believe even Venmo now has cryptocurrency. It's going to be used for food safety, supply chains, retail, automobiles, government services. Imagine having your ID digitally now, where it's on a blockchain. It can be duplicated. It can be copied. No more fake IDs. Yeah. Healthcare, insurance, energy, real estate, international trade. And the key features of enterprise blockchains, it's a decentralization aspect of them, where the blockchain verifies all these transactions. Immutability means basically you can't argue with the computer program. It's transparent, and it's cheaper and faster too, because you're literally letting artificial intelligence and using code and rules that it has to follow you're using that to approve these transactions. And it has to be done several times by independent miners. And then you got regulation. So regulation that's coming. I believe, in my opinion, that cryptocurrencies are going to be treated just like capital gains, just like an asset. You got your stocks. So instead of buying company stock, you're buying cryptocurrencies from these companies that are going public, but they're not using your traditional method of listing on IPO. That they literally create a blockchain that spits out cryptocurrencies. I'm gonna be going over some life-changing opportunities, some projects where you could 100 times your money That's right. If you drop $1,000 in some of these cryptocurrencies, you have the potential to get 100 times your money back. We all saw what Doge did, um, where it went from you know 2/10 of a penny all the way to like 69 cents. Crazy gains, right? So there's a lot of opportunities like that, that are long term. You don't want to miss it. You could really change your life financially, but not only, you know, for you and for this lifetime. You could actually set up your children's children and their children. You could really leave a legacy. It's still early. They're saying Bitcoin is gonna be worth over $1 million, and I'll explain why on the next video. So you don't want to miss out. If you like the content, if you enjoyed it, if you found this informative, please like, comment, share, subscribe to my channel. Hit the little bell so that way every time I drop a video it notifies you. And just let's not leave anybody behind. I think it's very important that we jump in to an asset class where you know, most people don't get to participate in a brand new asset class. This hasn't ever happened in our lifetime, and it won't for another 1,000 years. You know, when did the stock market get created? You know, now we got these, you know, digital assets. So don't miss out. You know, don't do it for yourself. Do it for your family. With that, you know, I hope to see you soon. And, you know, everybody just, you know, figure out a way to get involved and do your own research. I can't stress it enough. Enough. Peace out, everybody.